Welcome back everyone. In our previous lesson, we discussed trends and the concepts of support and resistance. Today we will delve into the topic of trend lines. Trend lines are drawn at angles either above or below swing price levels. We have already discussed what swing levels represent and how they appear in real life scenarios. Identifying swings on charts across various platforms should not be challenging. These trend lines act as a visual representation of trends. To illustrate, let's look at a live scenario on our trading view chart. Drawing trend lines depends on several factors such as the desired time frame, the chosen swing level, and personal preference. For instance, I will draw a trend line starting from this point. As you can see, this trend line serves as both support and an indicator of the ongoing uptrend in the market. By selecting this particular swing level, we are expecting that whenever the price touches this trend line, it will bounce off it. Thus, we anticipate the price not breaking below this line in an uptrend. Consequently, whenever the price approaches or closely interacts with this trend line, it presents a buying opportunity since it acts as a support level. For uptrends, trend lines are typically drawn below the price level, just like in this example. When the price touches the trend line here, it bounces off it. The same happens when it touches the line again here and here. This trend line remains active and serves as support until the price breaks below it. As we mentioned before, a support level can become a resistance level. Therefore, when the price breaches this trend line, it no longer acts as support but becomes a resistance level. In such cases, when the price touches the line, it resists further upward movement. However, in the current chart, this trend line still serves as support. If the price comes down to this area, we can expect it to bounce back up. So in this scenario, we can go long on this chart, anticipating upward movement. I hope this clarifies the concept of drawing trend lines in uptrends. Now let's consider another example of an uptrend. Suppose we have another trend line drawn from this swing low. Here is what another trend line will look like. Initially, it serves as support when the price is above it. We can observe that whenever the price touches this line, it bounces off it. The only time it breaks is at this point when it transitions from serving as support to acting as resistance. By extending the trend line, we can track its behavior. When the price broke below it here, it started acting as resistance. Every time the price touched it, it pushed the price down. Currently, this trend line is still serving as resistance and no longer acts as support. However, if the price breaks above this trend line, it will resume its role as a support level. This demonstrates how trend lines are drawn. Do you understand? Now let's explore another scenario, a downtrend. In this case, we will pick a trend line from this swing high, which indicates a swing high point. Here is what the trend line will look like. When drawing a trend line for a downtrend, it is positioned above the price level to determine resistance points. Conversely, in an uptrend, the trend line is drawn below the price level to identify support levels. We can even draw two trend lines on a chart, creating a channel. This channel helps us identify both support and resistance levels. In this example, we can see that these areas represent resistance, while these areas represent support. Whenever the price touches a support level, it presents a buying opportunity. On the other hand, when it reaches a resistance level, we can consider selling or short selling. By utilizing this channel, we can identify potential trading opportunities. It is important to know that when a resistance level is broken, it can subsequently act as a support level. For instance, when the price touches this support level, it bounces off it. We have discussed the concept of a breakout trap, which institutional traders use to deceive random traders and profit from their incorrect positions. In this chart, we can observe that the trend lines follow the overall trends we discussed. To draw a valid trend line, you need a minimum of 2 swing highs or 2 swing lows. In this example, these are the 2 swing highs we used to draw the trend lines. Even if this price action has not yet occurred, it can serve as a basis for predicting future trends. Remember, when drawing trend lines for downtrends, position them above the price level to determine resistance points. Conversely, for uptrends, draw them below the price level to identify support levels. In this video, we discussed the concept of trend lines. Take a break and I will see you in the next lesson.